We're entering essentially our sixth year of economic recovery. By July of this year, this will be the fifth longest economic expansion on record since we've been keeping track of them from 1854 forward. So we've had 33 recorded expansions. This is going to turn out to be the fifth longest, and that's pretty amazing when you think about how people have felt about it. They don't really feel like it's a recovery, but compared to a lot of other recoveries we've had in our past, this is actually a pretty solid one, particularly in terms of its length. The big thing is that 2014 was really a watershed year, if you will. Nationally, for the first time, we created over 3 million jobs. And that's sort of the big target. That's a check plus year when you get 3 million jobs. So that was really a big thing. And during the year, we were able to surpass our pre-recession high in employment, total employment for the country. And now we've exceeded that by over 2 million nationally. In the state, again, another watershed year as far as job growth is concerned. 114,500 jobs were added in the state, and that's kind of 100,000 for the states, like 3 million for the U.S. Whenever we push 100,000 jobs, that's a check plus year in terms of job growth. Both state and the U.S. have unemployment rates that are at 5.5% right now, which is pretty good. It's pushing the benchmark rate of 5%. We expect 2015 to be more of the same, pushing a 3% growth rate for 2015. We won't have quite as strong job growth, probably 75 to 80,000 jobs, but overall we think the unemployment rate will drop almost another full percentage point from where it is now, certainly below 5%, maybe as low as 4.6% by the end of the year, December of 2015. We think that the benchmark rate for both the U.S. and the state is around 5%. So when we start to see us push that 5% level of unemployment, we're going to start to see the wage growth pick up. We've seen it the last 3 months. We've actually seen real wage growth increase when you count for both the hourly wage and the number of hours worked. Both have come up a little bit. The combination is the money you put in your pocket. And so as a result of that, we've seen a real sharp spike in terms of real take-home wages in the last 3 months, because that's the purchasing ability. When your real wages rise, when your real take-home pay rises, you put that together along with essentially $300 billion that have been put back in consumer pockets because of the over $1.50 reduction in the price of gasoline since last summer. That's a lot of discretionary income. That's a lot of money that's going to start to push other sectors of the economy forward for 2015. So 2015 looks like a pretty good year.